are there asset classes that you think are better suited, or asset classes or investing strategies that you think are better suited to this environment that we're heading into here? And are there asset classes that you wouldn't touch with a 10-foot pole in this type of environment?
Well, I mean, we're index traders, okay? So we don't focus on individual stocks. Look at Friday, for example. What was your safe haven on Friday? Nothing. I mean, literally everything went down, right? Plus 90% down day. That's the problem with these right-sizing events. Gold hasn't done anything all year. If people were all bullish gold as a hedge, Bitcoin certainly hasn't worked either. And by the way, on Bitcoin, I put out a bullish article in January with a big caveat. I said it's down, but it's completely tied to the S&P, and I expect a bear market, so I expect downside. And my view was, as a long-term 10-year, this is not Northman trader talking, this is Northman investor talking. I'm going to be very patient looking at technicals and see where I want to nibble on this here and there. And in terms of, because I linked it to the 2000 tech bubble burst, because you had the big guys, the big winners, Apple, Amazon, they were all carpet bombing down 85-90%, but they were the long-term winners, while the pets.coms and all those other things blew up, right? And crypto to me is kind of the same kind of space. There's a lot of fluff in there. There's a lot of non-sustainable business models in there. They're probably all going to disappear, but there may be one or two long-term winners in there. So that's not for me to recommend to anyone. It's just my personal strategy, as I'm looking at this being under incredible pressure as well, also having a lot more downside risk if you go into a larger bear market. For us, it's literally being flexible. If you're not into shorting, which I don't recommend for most people, okay, shorting is not easy. Buying is easier. But to me, when you have big sell-offs, increase exposure. When you have big rip-offs, decrease exposure, right? It keeps building flexibility. Know where the points of confluence are, of support, right? Where it makes sense to be more aggressive, you should be less aggressive. There will come a time when all this sorts itself out, and then we do have a structural bottom in place. Was June a structural bottom? A lot of things will have to go right for that to be the case. And with monetary tightening still ahead of us in terms of restrictive policy, history at least tells us it's not a structural bottom yet. It may be a bottom for this year. Doesn't mean we can't roll over into 2023. And that's the other thing. People are really easily influenced psychology-wise, and I've been guilty of this myself, by what happens on a particular day or what happens in a particular week or two, because price impacts sentiment, right? This is when you get people too negative on the downside, they call for new lows. And we're all influenced by this because we're hearing all this, right? You look at January, all these banks came out, 5,000, 5,100, 5,200, 5,300. These were all their price targets. Not one of them said 36.30.
Right.
Okay. Not one of them. And then when we got to 36.30, they were talking about 3,000. They did. Well, thanks. I mean, if you listen to this, you're just getting doubly screwed, right? But they're also human, and they're also part of the sentiment game, right? And so keep your own head on your own shoulders. That's why technicals are so great, because to help us, to tell us that, while we're at 4,800, it makes little sense to shout for 5,300 without something else happening first, which it did, right? So I like the strategy of being flexible to react and be more or less aggressive. We are pursuing a long short strategy. We're either net long or net short, and it depends on where we are with the signals. And then we just try to navigate these situations as best as possible. I'll just use an example. Sentiment is so important. I think I may have mentioned this earlier, but on Thursday, before the Powell meeting, the Powell speech at Jackson Hole, Wells Fargo said he's going to be dovish and there's going to be a relief rally. Goldman Sachs, he's going to be dovish. There's going to be a relief rally. Wrong. All of you guys. And people got literally caught with, you know, maybe having bought the dip from the initial rejection that we just saw. And they got completely crushed. So the notion that there are, you know, the insiders that really know what the next big move is, don't trust that either. I don't believe that for a second. That anyone can be wrong, including myself. Anyone can be wrong, right? And so sentiment is part of the gauge as well.
If you enjoyed this video clip, click here to watch another one you should like.